be talking about a very important topic. I have someone here that we're going to be interviewing today, which is credit repair, what to do to get a better credit. He's one of the top producers, one of the persons that I've actually had the pleasure to work with. I'm actually working with him right now on a few transactions with some of my clients, and he's here to help them to go from average to better. And without further ado, let me introduce you guys to Carnell Newsome. Welcome, Carnell. Thank you so much for joining us today.
Hey, I appreciate you having me on your show, and I'm really excited to be here and share some really powerful tips about credit. Hey man, when it comes to credit, credit is one of those subjects that's never taught in school. It's not taught in elementary school, junior high school, college, grad school, nowhere. So a lot of people today don't have a clue on what to do to build credit. So thank you so much for having me on your show.
Oh, the pleasure is ours, my brother. It's been actually a minute that I wanted to get you in here because of how crucial it is to learn about credit, and a lot of I encounter a lot of people, especially in what we do, real estate, we encounter a lot of people that they have bad credit, not because it's their circumstances, because they're well off, money in the bank, and it's just because they don't know what to do. You know what I mean? So how long you've been doing this for, Carnell?
Believe it or not, man, I've been doing it for like about a decade. I'm like a dinosaur in the business. I've been doing it for a while. Just to give you a little background about me, I got into the mortgage industry back in 2005, late 2005. And then I found myself, as I was doing mortgages, that the market was saturated with loan officers. So in order for me to make a living in that mortgage industry at the time, I had to get competitive. So I had to think outside the box. So I started helping all of those people that were getting turned down for financing to improve their credit. And I got good at it. And that's how I got started in the business. And then from there, I've been helping a lot of people today to change their lives, to get into homes, have better interest rates, teach them how credit works, and just live a better lifestyle.
Nice. And have you been working for the same? What's the company name that you work for now?
Yeah, so the company that I'm a part of, that I actually own a franchise in, it's called United Credit Education Services. So it's my company that I own a franchise in. We've been around since 2004, and we have helped over 2 million people today to remove derogatory items off their credit report.
Oh wow, that's amazing! I didn't know that you've had a franchise. That's amazing.
Yes, sir.
Yeah, one of the things that we were talking about before we came on was how I admire you, because you're always I know you're an early riser. You're always posting stuff online, and that's one of the reasons, like, for your success now, because everything is digital these days, and. Yeah. And the amount of people that you help, all those pictures, people that were able to purchase houses, we're actually working with the client right now, you and I appreciate what you're doing for them, and able to buy cars, or because credit is how so let me ask you that question: how important is credit for someone? And
I mean, to be honest with you, credit is right up there with oxygen. We need it. We need it for everything. You need it for a car. You need it to get an apartment or a home. Employers now are doing background checks, and part of the background check is a credit check. So credit determines everything. It also determines your interest rates on your credit cards. It determines the type of insurance you're going to get. So credit is something that everyone needs. So I recommend that everybody definitely, work on your credit, or seek help, or, call me, if you need help with improving your credit.
Right. And for sure that we're going to leave your information here by the end of the show. So people can reach out to you to get a one-on-one type of thing. But let me ask you a question. What is the worst of credit and what's the best of credit, like in terms of the number, the FICO score?
Yeah, so your FICO score ranges between a 300 and an 850. So the lowest your score can go to, again, is 300. The highest can go to is 850. Usually if you have a credit score like between 300 and I'll say 580, that's considered like really bad.
Right. From 300 to 580,
yeah, about
really
300
bad.
to 580 is really considered bad, and better yet, 300 to about close to a 620 is kind of bad. So anything from a 620 to I'll say about a 660 is considered like fair, and then like usually between like a 660 and higher, between a 660, I'll say in about a 720, is considered good, and then usually between a 720 and above is considered excellent. So it all depends on what you're applying for too. So different lenders, they look at different scores. So there's two main score systems that's out there. There's your FICO score, that's what the banks use to give you financing,
Right.
and then there's your Vantage score. That's where you go online to like Credit Karma or freecreditreport.com, and you get the score right there. That score is not the same score that the lenders use. That score is always going to be higher than what the banks pull because they use a different algorithm. So
Oh, okay. That was going to be one of my questions there, because I even went through this where you get your FICO score, and sometimes even from like credit cards or from your bank account, and you kind of like feel like those are a little bit more accurate than Credit Karma or any of these third parties. So you said it's because it's a different algorithm, that because on my case it was like a difference of like almost 20 points.
yeah,
So
yeah, I seen it be as as high as of 80 points higher than what the banks pull. I have a friend of mine right now who has a 740 credit score in Credit Karma. He went to go get a car, and his credit score was a 660. So
oh wow,
it can be that big
yeah,
of a difference.
right. That's amazing how it could be misleading a little bit there, because you may think that because a 40 to a 60 difference could bring you from poor to fair, or from excellent to fair, right? It's funny because it's so important, the credit, and when we have like that first encounter with a client and we're asking them if they're pre-qualified already with pre-qualification letter. And the other day I had a client, and I knew he was lying right off the bat, because I was like, have you been pre-qualified yet? So we know how to guide you in the right direction in terms of what to look for, and how much the houses we should be looking for. And there's so many factors that goes into it, if you're pre-qualified or not, different programs and whatnot. And he's like, oh, don't worry about it, I have a 900 credit score. But at that, I knew that a little bit, that 850 was gonna be the highest, and
Right.
but it's extremely important. Even like with rentals, like you look on the multiple listing services, and any rentals that come up, they're like credit report, excellent credit, and the person could have $200,000 in their bank account. If they have bad credit, on the eyes of who is looking at that, it shows that they're not paying for the bills, right? It's how they look at it, right? It doesn't matter how much money you have. For example, of a client now, that a lot of money in the bank, and he thought that by maxing out his credit cards, he was doing something good. It's like, oh, they're seeing that I spend a lot of money. Not that, and he's like, I can't understand how my credit isn't going up, because I pay on time. But it's not just about that, right, Carnell? It's like the utilization is a huge factor, right?
Huge factor. It's really important with credit cards, if you really want to keep that credit score up, that you keep your utilization ratio below 30% of whatever the limit is of what the credit card grantor gives you. So if your limit's $1,000, you don't want to charge no more than 30%, which is $300 at any given time. Anytime you're carrying a balance on that credit card above 30%, you're actually giving up some of your credit points. Now, I do get people that come to me all the time and say, Carnell, I got good age of credit history. I've been keeping my balances on my credit card way below 30%, usually at 25%, but I just can't break that 750 or higher credit score. Like, what can I do to get that score higher? Well, if you keep your balance on your credit card below 10% of whatever the limit is, it actually gives you more of an increase into your credit score. So 30% is ideal, but if you keep it at 10% or lower, it's even better, you know?
Yeah, yeah. I was actually talking to a friend of mine, extremely smart kid, and he was teaching me a little bit about that on my credit. He goes, because I use credit cards for the benefit of it, like mileage. You know, we spend most of the stuff that we buy at the house, and then we pay it off. And he's like, I understand that you're doing that, but you also have to know when your credit card reports it. So, because let's just say if your due date is on the 20th, for example, and correct me if I'm wrong, I know you're the specialist on this. If your due date is on the 20th, but your credit card is being reported on the 23rd, just make sure that you pay it off before the 23rd, so it gets reported with a low balance. Is that kind of like you kind of have to know these things?
That's correct.
Right.
Mm-hmm. Yeah, absolutely. You know, so knowing when they report is really critical because, you know, people run into times where they have to leverage their credit because maybe they don't have, you know, the other resources to pay for something. So if you do have to leverage your credit more than often, it's really important to find out, you know, when your due date is, when your statement date is, and when they report. And you want to make sure that you keep that balances below that 30% or 10%, you know, at least 3 days before the due date, because that's usually when they report.
Right. And one of the things that, like, you know, and I'm not, you know, I follow a lot of these guys, financial experts, and one of them is Dave Ramsey. I know you know of him.
Yes.
And he's 100% against credit cards, and I understand there's a lot of people that will not do a good job by getting the benefits of a credit card, you know, like cash back or mileage, or, you know, I have a friend that he takes 2 weeks vacation every year with mileage, you know, but he knows how to use it. So I'm not, you know, by any means telling people to overuse their cards. As long as you know what you're doing, you know the balance, I think it could be something positive on someone's life, right?
Absolutely. And I don't think Dave Ramsey is against credit card. He's against like compound interest. You know, he's against interest.
Right.
You know, so he's pretty much, you know, educating people that, listen, if you can't buy it cash, then don't charge it.
Don't charge it on a, yes.
You know, if you can buy it cash and you want to build your credit, charge it, but now you got the means to pay it.
Right.
You know, the reason why most people are into credit card debt is because, you know, they don't have either enough sufficient income or they don't have enough money in savings to pay back the debt. And then they find themselves where the interest keeps compounding each and every month, that it becomes like a car payment. You know, I know people who got $19,000 worth of unsecured credit card debt, and their monthly payment on it is like $300 a month. I mean, that's a car payment. You know, so I think that's what Dave Ramsey is talking about when it comes to credit cards.
Right. So let me ask you a question. How do people get started then? Like how, what's the first thing to do? Obviously reach out to you, but what are small things that they can have micro results on a daily basis before even reaching out to you?
Yeah, so the first thing I would recommend anybody do is go to annualcreditreport.com and get a free copy of the credit profile. Look for any inaccurate information that's there. You know, look for anything that's alarming to them, and then write those things down, you know, before reaching out to me or even, you know, going online and disputing them. So that's the first thing I would recommend is go to annualcreditreport.com. Now, because of this pandemic, they're allowing people to check their credit profile once a week, you know, and they can do it once a week. It doesn't cost them any money at all. It's totally free. They will not give you your score. If they do offer your score, my recommendation is don't pay for it, because the score that they're giving you is not the same score as what the banks use. So that will be my first step.
Okay. And results. Is it each case is different, or how soon will people start seeing results with what you and your company offer?
Yeah, good question. Everybody's results are different. It varies from person to person. It depends on what's on their credit. It depends on how they go about paying their bills on time going forward. It depends on, what are they doing to establish credit. So it's a mixture of a few different things. So if you got someone who can pay their bills on time, they have some positive credit history, like a credit card or car loan or something that's being paid on time as agreed. And typically, a person like that will see results within 90 days of using a company like mine. And I tell most people is that if your credit's like fair, meaning like you got a couple negative items up there, not too much, it could take about 3 months, 4 months. If your credit's bad, like you have a lot of negative things that are up there, maybe you went through a hardship, it could take anywhere from 4 months to 6 months or even 8 months. And if your credit's really bad, maybe over the past 5 years, you were just, negligence, or maybe, something, a tragedy happened,
Right.
something was out of your control, stuff like that. It could take up to a year, to repair someone's credit. But usually on average, it's about 6 to 8 months.
Okay, and that's not bad, because if someone comes to you with bad credit, it probably took them years to get there. And I know, like, everyone's like, oh, I want it and I want it now. How can we do it now? But 3 to 9 months, like you said, that I don't think that's a bad timing right there. Another question I have for you: does your company offer guarantees?
Yeah, good question. We offer a satisfaction guarantee, and that's only if someone is using our program and taking the right steps towards rehabilitating their credit. So, for an example, if someone is using my services and they're going through all my programs that we offer and they're not satisfied, we will issue them their money back. But the cool thing with my program is it's a month-to-month program, and we'll talk about that in a minute. But as long as you're taking the proper steps and they're not satisfied, we do have a satisfaction guarantee.
Okay. And is it a easy process? For example, is there, like, let's just say someone's looking for you and you're like, maybe you don't even need the program, like within like a month, you just do this and you just do that, and you should be fine. Do you encounter a lot of these people that are like right there, they're doing everything right, but just a couple of things, for example, the credit utilization, just pay this off and don't use it more than 10% or whatever, and you get those people as well?
Yeah, absolutely. I get all types of people. I get a lot of people who are looking just to establish credit. I get look at people who are looking to repair their credit. And I get look at people who just want free advice, So I get all types of people. And here's the thing, the cool thing with my company is we're not just a credit repair company. We are a financial literacy company. Our whole goal is just to educate people on what to do to get excellent credit. And then we have solutions. We offer services that can help them not only to fix their credit, but also help them to get out of their debt, and also how to protect their credit as well.
So when someone looks for you, you assign someone that's on your team to that person. Let's just say, because we work in an area where there's a lot of Hispanics, Brazilians, bilingual people, and whatnot. Do you have people on your team that can help these people maybe better understand in their own language to go through the process?
Absolutely. I have guys and girls that work with me that speaks English fluently, Spanish fluently, and a couple other languages as well. I also have a processing team that's there to assist me, because I'm only one guy, so I get a lot of people that are inquiring about improving their credit. So I want to make sure that any client who's working with me, they can get help at any given time. So I do have a support team that's there to assist me Monday through Friday. And again, they speak multiple languages, and they're very professional.
Right. Yeah, I see the stuff that you guys post online. You guys are always a group of people. I actually know a couple of people that work there with you. And that's amazing, because it seems like that you hold a nice environment for people to work with, and it all and also on that topic, I see that every once in a while I see a post from you regarding like if someone is looking for a job and job opportunities. That's crazy. Like you're, for lack of a better word, not crazy. Like that's amazing that your company provides that, like, job opportunities. How does that work if someone is watching us here right now and they're looking to get
question.
into it?
Most people today in today's economy, the reason why they are in credit card debt or they're in debt period and they have bad credit is due to a lack of income. And so we realized at our company that, a lot of people are looking for an opportunity where they can actually earn a little extra income if it doesn't interfere with the current schedule. So we do offer an opportunity for people where they can actually come on board with us. We'll educate them, we'll teach them, we'll train them on everything what we know. And they can actually, earn a little extra income just by referring clients to our company. Now, they will not be the credit experts. They're not the ones pulling anyone's credit. My company will be pulling the credit. They do the work, my professional team. So all they're doing is they're a representative for our company, like a consultant, and they're just out there educating people and teaching people how credit works. And then when someone does need the services, my processing team steps in. They do the work on the client's behalf, and they're the ones that's helping the clients to get an excellent credit score.
Oh, nice. And one of the reasons that we wanted to bring you in is because of that. The main reason that we created this podcast is to be a source of information to our clients, to our community in general, and we feel as if the when people seek for knowledge, they get better results in such an important topic as credit. You know what I mean? So very exciting to have you here today. One of the questions that I had in regards to the credit bureaus, are they like a branch of the government? Like,
Good question. The credit reporting agencies, Equifax, TransUnion, and Experian, they're simply privately owned companies. They have no relationships with the government. They're not credit bureaus. They're just privately owned companies. They're solely in the business of collecting information, and selling information. So, for an example, you ever notice like when you apply for like a car loan or you apply for a credit card, all of a sudden you get like all of these pre-approval letters in the mail, and the first thing you would think that, wow, my credit score might be going up. Well, no, it's not going up. What it is that the credit reporting agencies are selling your information to these big companies, and these big companies are then sending you these pre-qualification letters in the mail, and they're hoping that you do apply for the financing, because if you do apply and your score is low, the lower your score, the more money you're going to pay in the interest rate. So they're privately owned companies. They're solely in the business off of marketing your information.
Okay. And if, like, let's just say a mortgage company pulls your credit today, okay? And when I'm talking to clients, I let them know that a mortgage, it's kind of like when you're looking for a house as well. You want to see different opinions and talk to different people to see who can provide you the sometimes a better rate, sometimes a better program, how long that person's been in business and whatnot. But then they're a little bit afraid of, okay, I'm going to go to this person, they're going to pull my credit. And then I'm going to go to that person, they're going to pull my credit as well. What's the window that they have to do like some shopping that it's not going to affect their credit that much?
Yeah, good question. I love the questions you're asking me. So when you're shopping around for any type of financing, do your best to keep your inquiries within a 15-day window. As long as you keep your inquiries within a 15-day window, as long as you have 2 or 3, those inquiries only impact your credit score one time. Anything outside of that 15-day window, you start to pull your credit again. It makes it seem like you're desperate for credit, and those inquiries can actually start to drop your credit score.
Oh, wow. That's that. Good question with a great answer.
Absolutely.
Does that work the same with a car loan?
Absolutely.
Yeah?
Yeah, anything. Student loans.
Any
car
loans.
Yeah,
any
any
loans.
loans. Yeah.
Okay. That's good information right there. Yeah.
Well, thanks for asking that.
Yeah.
That is a hot topic that a lot of people are not aware of.
Yeah. They don't understand. They don't understand. And if like I know like a friend of mine just refinanced his house now, and because he had such a good credit score, he was able to get a rate under 3%, which is amazing.
Free
you
money.
know what I mean? Like that's unbelievable, and it was all because he was able to get into a program because he had good credit. So I wanted to bring you in because we encountered this a lot in our business in real estate, like all the time for like all these loans, like you don't get approved for this program just because you're not there yet, or sometimes they're like right on the borderline, like let's just say you need a 720 score to get into that program and you're like 710 or whatever the case may be. So a question that I have for you, is there like an app that people can simulate, like for example, if I pay this, if I pay that, my credit can go up 10 points? Not really like a reliable source, but just an idea. For example, I have an app here that is a mortgage app. Every once in a while, if people force me into it, I work some numbers. I like them to talk to their lender about that. But to give them a ballpark, is there someone that they offer out there for that?
Yeah, I mean, most of the companies now are offering like a free credit stimulator. It's not 100% accurate because things changes on people's credit report all the time. But like if you have like Chase, they offer credit-wise. I'm sure Wells Fargo offers something as well. But a lot of these companies, including the credit card companies, are given some type of free credit monitoring, and they have like a credit stimulator in there that you can use. But as far as an app by itself, it'd have to be tied to your Social Security number so they can actually monitor your credit.
Yeah.
So like I know Credit Karma, they offer something, but it's not a credit stimulator. They just tell you some tips on what to do to build your credit. But I know Chase offers something. I think Wells Fargo offers something. So those companies do offer some apps that you can download to your phone, or you can go online and do some credit scenarios to see how much your score will go up to.
Nice. Perfect. I mean, I'm sure that if we're going to talk about this thing, we're going to be here for a very long time. I kind of wanted you to bring you in so people can actually reach out to you. We're going to put your information down here. If someone wants to ask you more questions and go to on a one-to-one type of thing, this podcast actually it airs outside of the state of Connecticut as well. If someone wants to reach out to you from like outside here, can they do that?
Absolutely.
Are you like able to help someone that's like down in Florida, for example?
Yes. My services are nationwide. I can service all 50 states, including Puerto Rico and the Virgin Islands. So I can service all 50 states. But one thing I do want to mention is we do offer a program. It's called Credit by Rent, where if you're a renter and you're paying rent and you're looking to build your credit score, we can actually add your rent to your credit history. It's a great program. I have helped a lot of realtors nationwide to help their renters to become homeowners with this program alone. So if you have like a credit score is 10 points lower, you need an extra 10 points to qualify for a loan, this program right here is a game changer. I mean, I can go back as far as 2 years. Some of my clients have seen a 50-point jump. One of my clients seen a 102-point jump in a matter of 30 to 45 days.
Oh, wow. So you're telling me that if you've been paying your rent on time for the past 2 years, that you can bring that into your credit report and make your credit go up?
That's correct. So I can go
amazing.
Anywhere from month to month up to 2 years and add it to the credit history.
Fantastic. Carnell, it's been a pleasure to have you here, my brother. Is there anything else that you want to add about your company, about what you do, and maybe an advice to someone that's watching out there? A lot of people, when when we're building up to the show today, or I was letting them know that we're going to talk about credit. They're like, "Oh, we're really excited about it. We want to learn more." So if there's anything you want to add, go ahead, my brother.
Yeah. One thing I want to get some advice on: if you're watching this podcast, if you're struggling financially, don't hide from your creditors. Give them a call, let them know that you're struggling. Work out a payment arrangement with them. Because you don't want any late payments on your credit report. A couple late payments on your credit report simultaneously can hurt your score more than a bankruptcy. So get in contact with your creditors and say, hey, listen, I'm unemployed. I'm struggling financially. Is there any way, I can defer my payments for a couple months? A lot of times they'll do that. But get in contact with them and communicate with them. Don't hide from them. A lot of people say, hey, I don't have the money. I'm just going to ignore the phone calls. I'm just not going to pay it. But get in contact with the guys because, you want to make sure whatever you're doing that you are in position to leverage your credit when you need it.
Okay, nice. And that goes back to the principle of telling the truth, right? Letting people know, because even though it could be uncomfortable a little bit, right? Making that phone call and letting them know that you're going through a hardship or whatever the case may be, but that could be so beneficial to you in the long run. They can work something out with you, and you can sleep better at night.
Absolutely.
Right? Yeah.
Totally agree.
So, Carnell, it's been a pleasure to have you on the show, my brother. There you have it, ladies and gentlemen. If you're looking to get a better credit report, a better credit score, make sure you reach out to Carnell Newsome. He's an amazing guy. I've known him for a while now. We'll see you soon on the next episode of the Rise Up podcast. Take care.